Good morning, good afternoon, everyone. People are slightly joining. We will start the webinar in a few minutes. We can start with some practical aspects, and you will have the opportunity to share with the speakers, and you can post your question in the chat box all along the session so that we can take this in the end. And this webinar is also recorded. Okay, welcome everyone. We are about to start this webinar in some minutes, and we will start to present you our following. This is a webinar dedicated following the launch of both Poseidon Principles for marine insurance and final institution reports. We have different speakers today. I will present shortly, and you can post your question in the chat box all along the session. You can find the screenshot here, and this webinar is recorded. People are coming slowly, and we are very happy to have you today. Okay, so I think we can start on time slowly. So welcome again, everyone. We're very happy to have you. I'm Morgan Graffion. I work at the Global Maritime Forum and also for the Secretariat for the Poseidon Principles for marine insurance and financial institutions. We are very happy to have this session today, following two publication of key annual disclosure reports. This webinar is also recorded, and you will have the opportunity to ask question all along in the chat box function, and we will take the question in the end. So let's start right away, and I will present everyone. So for today's session, we'll have a quick introduction I'm happy to have and do with you. And then we will have different two parts in this webinar with the key takeaways following the third publication of the Poseidon Principle for Financial Institution Annual Report. And as well, we'll have these same moments with the marine insurance. And we'll have time in the end for a question and answer session. So please use the chat box to ask all of your questions. So why are we here today? We have the recent publication of those two annual disclosure reports. The one for financial institution was launched in the 14th of December, and the one for Poseidon Principle for marine insurance was recently published on the 26th of January, and it's the first of its kind for marine insurance. And those two reports are available online on the Poseidon Principles website, so you can have a look on this. So for today's session, we are very happy to have different speakers. So we will start the session with the key takeaways and sharing of experiences from different signatories from the Poseidon Principle. We will start with Michael Parker, who is the chair of the Poseidon Principle initiatives and also chairman Global Shipping, Logistics and Offshore at Citi. Then we will have the concrete feedbacks from two signatories, from Stephen Fuster, Global Head of Shipping Finance at ING, as well as Dr. Marco Albers, who is the Head of Specialized Lending at DekaBank. And then after we'll have kind of the same flow with Patricia Kern, who is the chair of the Poseidon Principle for Marine Insurance, and Marine Strategy Consultant and CEO at Swiss Re Corporate Solution, as well as Rolf Thor, who is the Vice Chair of the Poseidon Principle for Marine Insurance, and Chief Executive Officer at GUARD, and as well as Ben Abraham, who is Global Head of Marine of WTW. And first, before just having a quick introduction on what are the both initiatives, we wanted to have a quick survey and poll with you. So just to see how much you know about this initiative before we go a bit deeper on it. So you should have some questions that are now on your screen, which is how much are you familiar with both initiatives, and have you read or not a report, and are you about to do so? So just sharing this quickly. Yes, we can see different answer. Okay, so it seems you're mostly familiar with both initiatives. Maybe we can share the results and yes, so that's okay. Thank you for your feedbacks on that. And not everyone has read the report soon, but I'm sure we will have some times to do so. Oops. So just a quick recap on what are the Poseidon Principles. So most of you know what they are, but it's a framework for assessing and disclosing the climate element of the ship finance portfolio. And they are mainly for the different type of financial institution you can see on the screen. And as for the signatories, there are 30 signatories so far from different regions in the world. And this is the different signatories. And as for the Poseidon Principles for marine insurance, these are a similar framework, but it's more for assessing and disclosing the climate alignment of hull and machinery insurance portfolio. And you have also two types of membership. So the signatories are insurers with insurance products covering hull and machineries. And we have also affiliate members who do not fall on the scope of reporting or other type of insurance stakeholders and support the initiatives. And these are the signatories and affiliate members so far, as well as our supporting partner on the screen as well. So now I'm happy to leave the floor to Michael Parker, so the chair of the Poseidon Principle for financial institutions. So Michael, the Poseidon Principle were launched in June 2019. So 3 years later, the frameworks cover now more than 2/3 of the global ship finance portfolio. And this year you had 28 financial institutions who reported their climate alignment scores. So Michael, could you share with us some key takeaways from this year reporting?
Thank you, Morgane. Before I do, I will do that. And I'm joined by Stephen and Marco, who will give more specific feedback on their experiences in this third year of reporting. But for the benefit of the audience, I think, let me just go back to the beginning and remind people that the Poseidon Principles were launched by the banks really for two main reasons. And then a third reason has become apparent. The first reason is the banks play an outsized role in the provision of capital for the shipping industry. Therefore, our influence compared to financial institutions in certain other industries is clearly stronger. And therefore, when we gathered the original 11 signatories to launch the Poseidon Principles, we were very conscious of the responsibility we had as the primary capital providers, but also felt that mainly to do with that, plus I suppose some of the history of shipping finance, that transparency was going to be key, that by reporting the impact of our portfolios from an environmental footprint, being transparent was a key to helping work with the industry to move the agenda forward. And I do stress that this has always been a collaborative effort with our clients in the shipping industry. The second thing is we took advantage of the IMO and the DCS regulation. But I would say that whilst we're guided by the IMO, we're not dictated to by the IMO. And that will become apparent in a minute by what I'll talk about briefly about maybe the future direction. I think the third thing that has become apparent during COVID, and the last 2 years of results have been impacted by COVID. But what COVID has done is illustrate the importance of supply chains. And for the shipping industry, and for those of us that finance it, this really has put shipping back on the front page. People have begun to understand really what the shipping industry has done for global trade, but also how key it is in essentially the security, the energy security, the food security, essentially how global trade is carried out. And therefore, as we move into a world of counting emissions, the role of shipping and the role of the cargo on the ships really is very, very important. So the emissions from shipping become the scope 3 emissions of the cargo owners. And we're seeing that very clearly now in the way in which cargo is beginning to dictate some of the direction, both on the technological side, but also in terms of transparency. And I think that's really the key. The principles of accountability and transparency are key to what we're doing. We didn't know when we launched that a few months later, COVID would hit. And really, although this is the third year of reporting, the first year was really, where did we start? Because none of us knew exactly where we started with our portfolios. The difference between the Poseidon Principles for Finance is that we take our portfolios, much of which, of course, was initiated years before we actually launched. The last 2 years have been dominated by COVID. And the third year, the report we're talking about here, the third year report, clearly shows COVID still influencing, whether it was from supply chain congestion affecting container shipping, where container ship side ports, the cruise industry just beginning to come back, and that clearly affected in terms of, say, shorter journeys. So we've learned, as in our third year of the Poseidon Principles, how actually operational issues within the industry and operational issues as they may affect our own individual portfolios to some extent determine the results. And I think that's what's key. Early on, some of the trade press would comment on who was aligned and who not aligned. And I think they've matured, if you like, and understood that this is going to take a number of years before it settles down. But having that ambition is clearly important in dictating the business decisions we make, so that our objective is to align with whatever the trajectories that we are aligning to. And at the moment, we are aligning to an IMO-derived trajectory. Looking ahead, we have made a commitment as the Poseidon Principles Association. We made this commitment formally in September during the Global Maritime Forum Summit during UN Climate Week, that the Poseidon Principles for financial institutions and the Poseidon Principles for insurance, though I'll leave Patrizia to talk about that, committed to implement a 1.5 well-to-wake trajectory during 2023, and we fully expect to do that. We will keep an IMO-derived trajectory, and what is very important is to see what the IMO does at MEPC 80 in terms of updating its own ambitions on this, and particularly in the context of 2030. As we look at 2050, clearly the commitments that individual institutions have made to net zero are important, but the reality is regulators, investors, everyone is looking to where will you be in 2030. What we know from within the shipping industry is that there is a tipping point in 2030, that if we don't have at least 5% of all fuels being used being zero emission fuels, shipping won't meet that 2050 target. So the purpose of the Poseidon Principles is that in the decisions we make with our clients, that we motivate them to make the right investment decisions. So as I said, 2021 was influenced still by COVID, particularly on the container side and particularly on the passenger shipping side. There are some remaining issues in terms of the methodology, and we have, in order to be consistent and transparent, we await the IMO to update some of its methodology. There are particular types of shipping, like passenger shipping, like shuttle tankers, which we don't think are really treated consistently or favorably in the way that other sectors are. But that will evolve, and I think that is a very key thing here, that the Poseidon Principles will evolve in line with both a combination of society, but also, IMO policy and, of course, the data. And we benefit as the Poseidon Principles from having taken advantage of the IMO DCS regulation. We have set an example. We've seen not just the Poseidon Principles for marine insurance, but also the Sustainable Steel Principles. And with the help of RMI, other hard to abate sectors are working on similar methodology to be transparent about the emissions in their portfolio. We are 2/3 of all shipping finance. We expect to continue to grow that, and we would welcome additional shipping lenders to join us. This is not a closed shop, as it were. We want anyone who is committed to support the transparency around capital in this industry to join us and help us continue to make this initiative the leading initiative it was when we launched in June 19. The third year, this year, as I said, will be very interesting, and we look forward and hope to see that some of the impact of COVID will have gradually begun to disappear. I think with that, Morgane, I'll hand back to you.
Thank you very much, Michael, for this overview. So now I will go with Stefan Fuster from ING, and ING joined the Poseidon Principles back in 2019 as one of the founding members, and it's been so your third year of reporting. So I wanted to check with you, is this exercise becoming easier over time? So can you share a bit on that?
Yeah, sure. Thanks very much, Morgane. Yes, look, at the outset, let me just say it is becoming easier, but obviously let me give you a little bit more detail as to why I think that's the case. I think, firstly, when we announced the Poseidon Principles back in the summer of 2019, there was kind of a level of, if you like, mistrust amongst our clients. They were kind of asking, what would we do with the information? Was it going to be confidential, or would we share it? There's a big concern, would we finance vessels which are above the pathway? Were they even required to provide the information was one of the problems. But then also, when the information was coming in, it wasn't always in a consistent format. But by sort of working with the clients and communicating with the clients, I think what they've seen is that we don't share the information, and in fact, we have a confidentiality letter which confirms that. They are seeing that we will finance vessels which are above the pathway, but for us to be able to do that, we have to be assured that the client has a decarbonisation plan, i.e. that they're recognising their responsibility towards society. So if an owner comes to us with a vessel above the pathway and says, look, we're really not interested in decarbonising, we just want to run this ship into the ground and make as much money as we possibly can, then that's not a client for ING. And I'm sure that's the case with all the other Poseidon Principles banks. But if they say, look, we're going to make improvements to the ship, retrofits, etc., to help improve the performance, and that's something we can work with the owners and even provide finance to them. So I think what they're recognising is that the Poseidon Principles really gives us a dialogue with them for a shared interest, because they want to decarbonise their vessels, and we want to decarbonise our portfolios. There's certainly no longer a question as to whether they're required to provide the information or not. And that's not a conversation that we have at all. And in fact, we have now a very high response rate. And again, that's largely true of all the Poseidon Principles banks. Where we don't get the data, there are usually specific circumstances around that. I think the other thing which perhaps is making our lives easier is that the data that's coming in is now in a more consistent format. Now, there's still some progress to be made on that, I would suggest, but we work with a third-party consultant to help us manage all of that data so that we can report on time. So I think that's been a good step forward as well. But that's kind of the external picture, if you like. But when we look at the internal picture, I think that's also become much easier. What we have now is a lot of data, and we have learned and continue to learn how to process that, and importantly how to use it. The bank's strategy, and again, common with many of our competitors, is that we want to decarbonize our loan portfolios, and shipping is a part of that. What the Poseidon Principles does is that it gives us, if you like, the tool and the methodology to measure the carbon footprint of our portfolio. And that for us has been extremely helpful, because I think if we were trying to do that on our own, we would perhaps have struggled. I think what we're seeing now that we're 3 years in, that we can start to see trends in the way that the owners are operating their ships, but also we can start to see where the outliers are and try to understand why they are outliers. And sometimes it's because of the way the ship is operated. So for example, we had one vessel this year which was an outlier, but the reason was that it had been used for a very large part of the year for storage, and that doesn't help the score. But nevertheless, the ship perhaps was, or the ship wasn't a good ship. I think the other thing, and Michael touched upon this, is that we see that certain ships don't perform very well, perhaps because there isn't an appropriate way of measuring their footprint. So, for example, I think Michael referred to shuttle tankers, but also we're seeing that very small LNG vessels also don't perform well. So now that we have this data and we can kind of see the trends, I expect that we'll be able to improve the way that we look at the vessels and make it much more, if you like, accurate and representative. So in summary, I think it's been very good for our relationship with the clients, because they recognise that we have a common goal. But also, we believe it's been very good internally, because increasingly capital is being allocated to those loan portfolios who are making progress in decarbonising. And we can both demonstrate that and show that we are if you like, a leader for other industries to follow. So yeah, in summary, it's getting easier, and certainly our experience has been very good.
Thank you very much, Stefan, for this feedbacks. Very interesting. I will now pass the floor to Dr. Marco Arders from DekaBank. So, Marco, you are one of the 4 financial institutions that report for the first time this year. And maybe could you share with us what surprised you along the way with this first disclosure?
Well, maybe there were not too many surprises. I think it's more like lessons learned along the way, like a continuing learning curve, also about the details of Poseidon Principles. Maybe what personally surprised me was to see that at the very end of our first disclosure process, that our score was a bit weaker than what we initially actually anticipated on proxy data in our own test phase. And actually, Michael touched on that earlier. It explains, or the outcome explained by supply chain disturbances. So we had higher speed and higher port waiting times, in particular for container vessels. So that also attributed to a misaligned higher score in our portfolio. So that was a bit of a surprise, but again, it explains, and Michael said also operational issues determine the results. That's also here a learning curve for us. Obviously, we obviously hope that this will be a one-off effect, and for the next reporting years, that will be not the same case anymore. Otherwise, other lessons learned or surprises, maybe that some lessors at least did not respond when we reached out to them asking for vessel data. So more lessors from the Asian region, I must say. But then on the other hand, the feedback, the response from container liners, for example, so from larger shipping companies, was very professional and quick. But then again, on the other hand, maybe some smaller shipping companies came in a bit slower. Overall, a mixed picture actually in a way of response. After all, for us, as first time, the first year reporting received in total 75% response and respective data, which is, I think, quite good for first disclosure. And that also given that we didn't have any respective covenants in our loan documents in place at that time. Obviously, we also do benefit from, for example, being part in a club deal with other Poseidon Principles banks who already requested this necessary data. So we benefit and get it immediately the same way. I think if you're only a participant in a club deal, it still as a first reporting in a first reporting phase, it could get difficult to get respective data as long as you do not have a direct contact actually to the ship owner or the borrower, which you actually should have as a lender anyway, or if you don't have a direct contact to a charterer. So that's our first experience, especially in cases when the lessors don't provide you with the requested data. I think what is very important and what I really wanted to mention is that it is very helpful for banks who are currently considering to join the Poseidon Principles to possibly get in touch with another signatory bank early on to get advice and detailed insight. For us, for example, it was very helpful that ING supported us in this process of onboarding. So they shared their own views and experience from the years before. That helped us to set up internally the process and get things on the road. So Stephen, thanks for setting us up on this. Of course, having said that, in return, we would be also happy to share our own lesson learned and experiences with any potential new signatory bank to avoid surprises along the way for the onboarding.
Thank you very much. What I can hear here is all about how the Poseidon Principle is also a way to collaborate in between signatories and that it was a helpful tool. So thank you very much for your sharing your experience. So now we will have the kind of the same flow with the Poseidon Principle for marine insurance. So this is the first year reporting. I will now pass it on to Patricia. So Karen, which is the chair, who is the chair of the Poseidon Principle for marine insurance. And so this is the very first year that there is this annual disclosure report for the marine insurance. So Patricia, as the chair of the initiative, could you share with us the main key takeaways from this first milestone?
Thank you very much, Morgan. Sure, I will, but I wanted to start by expressing my very sincere thanks to you, to Anna, and previously to Alice and Heidi. It has been a long journey, 2.5 years, and you have done really an amazing job. My contribution will be then followed by Rolf Torre and Ben, who will then share more specifically what were the main challenges and how it was around collecting data. This is really a key milestone. After, as I just said, 2.5 years that we have been working very intensively on it. And this is a key milestone, not in the maritime, but also specifically in the insurance sector. It's the first hard data on the sector carbon footprint, and this will encourage more transparency. The 8 signatory and the 9 affiliate members send a message that shipping decarbonization is important to insurance company and their clients, and they really help building this global momentum towards the climate action. In the course of the many presentations that I did, the many meetings that I had with so many insurance players, the concern was around the perception that the insurance industry wanted to step out. This is exactly the contrary. We need to create this type of transparency to be able to support our clients. In this sense, and there are so many initiatives, and especially the Net Zero Insurance Alliance, of which the largest player worldwide are part of, the insurance industry is and must be in the forefront of the impact from the climate change. And the marine industry, that is normally considered the more traditional, we are quite proud to say we were the first line of business. In this sense, we show that as marine underwriter, we are in the forefront of this decarbonization journey. We want to understand the new technology and the new risk to be able to play an active role in de-risking this transition. The level of ambition and transparency in the first year of the reporting is really important. We have 2 trajectories. We have one is the IMO trajectory. The other one is the 100% CO2 reduction until 2050. And this is a first step to support the Paris Agreement ambition. This report is showing a significant level of data sharing between ship owner and marine insurer. I have to say that from our experience, and as Marco just commented before, there was by certain player a certain reluctancy to share the data, and as such the results can, let's say, can be improved in the sense of adding more players, but I am sure next year we will be able to work more proactively on it. There is room for improvement, both on the data score, even if this is not a surprise, and on the data collection process. We need definitely to do more to broaden our portfolio coverage. This is my contribution. I would like now to give the word to Rolf Torre, who can share more about GARD experience.
Thank you very much, Patricia, for sharing all of this. So, Rolf Torre, you are the Chief Executive Officer at GARD and also the Vice Chair of the Poseidon Principles for Marine Insurance. So we have already heard from financial institutions about their experiences so far. And in your opinion, what is the main difference between the financial and the insurance industry when it comes to climate reporting?
I think first of all, we have a lot of common. I think there are expectations to both banks and insurance companies from our capital providers, from the regulators, that we should be transparent when it comes to climate risk and climate footprint from those we are insuring and have in our portfolio. And I think it has been good for us in the insurance sector to learn from the experience the banks have had during their first years. And I think one main difference between at least a part of the insurance sector and the banks is that some of the major insurers on the marine side are mutuals. So we are owned by our clients. GARD has a commercial company which is owned by the GARD P&I Club. So it's the ship owners which are members in GARD which are our governing bodies. and they have decided that we should join the Poseidon Principles. So we have a strong anchorage from our clients when we went out and collected data for the first time. And that was a very good background to have going out to the market and then collect the data. And then it also helped that the banks had done it in the past, and for some this was just a natural thing to do. I think it's very important that we establish a standard for the market which are common. And I think the good thing with insurance is that we are a relatively limited number of large insurers which are leading the insurance placings for a relatively big share of the world fleet. And that means that with the 8 signatories, we actually capture a relatively big part of the world fleet. And it's a very nice diversity also among the signatories. We have some very large leaders in the market, and we have a number of medium-sized companies which are filling some of the other niches in the market. So I think we have a very good spread overall with the current signatories. And then of course there is always room for improvement in both in the collection process and Patricia says in the overall results. With actually a major part of the world fleet now a part of the Poseidon Principles for marine insurance, is quite natural that the footprint in the portfolio of the signatories reflects in many ways the world fleet. And I think we knew already when we started that of course we would be above trajectories for the first for this first reporting. And I think if we look at the way towards 2050, which is where the trajectories go to, it will not be a linear development. There will be some leaps, technological leaps in the industry, which will reduce the carbon footprint. There will be improvements in the logistic chains. There will be better utilization of ships. There will probably at some point be some speed adjustments required. So I think that there will be, along the way, we will see leaps. Sometimes we will be below the trajectory. I think we have to admit that for the first few years we will probably be above. But it's very important still to be transparent about what our portfolio represents, transparent to our own members and clients, transparent to the regulators, transparency to our reinsurers. That builds trust, and that's the only way we can go forward to this journey towards a decarbonized world fleet.
Thank you very much for sharing this with us, and yes, also the room for improvement. And this is a collective effort, so this is very interesting to have this. So now I will pass the floor to Ben Abraham, who is Global Head of Marine at WTW. So your organization is an affiliate member of the Poseidon Principles for Marine Insurance, meaning that this company is supporting and contributes to the insurance ecosystem, but for now you are not included in the reporting scope and don't report the climate alignment score. But in what concrete ways did WTW support the reporting process and the initiative? Can you tell us a bit more how you contribute to the whole effort?
Yeah, certainly. Our support started really with the drafting process for Poseidon Principles, and we represent ship owners. So at that point, we asked a fairly broad selection of our client base what they wanted from this initiative from a practical perspective. And from that feedback, essentially the remit from that feedback was ensuring that the reporting process was as painless as possible. There's no duplication in information reporting, and that in the first instance, the Poseidon Principles would simply follow the trajectory of the IMO regulations, which was basically what we achieved in in the final draft of the Poseidon Principles for marine insurance. When we were up and running, if I'm brutally honest, most of the heavy lifting was done by the key insurance leaders, and they've had a fundamental role in making this run smoothly. And organizations like GORD, AXA, Norwegian Club, etc., have done a great job in the first year. Our main role has been, in addition to the obvious points of encouraging further insurers to join, in terms of practical assistance, has been, in the reporting process, has been educating ship owner clients about the vision of the Poseidon Principles and the practical implications of participating. And I think, as Stephen from ING mentioned earlier, there's a common theme of dispelling a number of myths about the initiative and making people feel comfortable. And we did this through social media, town halls, we had broad information releases, but it was mainly one-to-one discussions with clients. And like most topics in the decarbonisation, there were some polarised views and lots of misinformation. But generally, clients were largely engaged in the initiative, and we had very, very few declinatures.
Great, thank you. And maybe one additional thing. So it's Ben, I would like to know, so in your opinion, what do you think would help make this initiative more widely recognized and having more members to join? I guess it's part of these efforts. Maybe you have some.
Yeah, it is challenging, and probably there's a bit of work to be done in terms of reducing the fear from insurers, particularly the key claims leaders in the market, about the amount of additional administrative work that is involved in participation, and also probably a bit of a reducing some of the fear of potential negative reception from individual ship owners, which generally we've not found. Similarly, I think there's probably a little bit of work to do in terms of conveying the vision. The Poseidon Principles will obviously not sort out decarbonisation on their own, and at the moment, as technology and logistics catch up, there's limits to how much that individual ship operators can actually do as well. But as Patricia highlighted, the transparency that the Poseidon Principles provide is certainly a step in the right direction, and is a tangible signal of support of the marine insurance industry for the shipping community in its decarbonisation transition. So there's a hope that hopefully the broader vision that's difficult to argue with, particularly if you believe in enlightened self-interest, that will outweigh the potential concerns of future members.
Thank you very much for sharing also this. So now we'll have time for some questions. I will just read it right away. So maybe there is a question for the Poseidon Principle for financial institutions first. So it is about what is the benefit for a ship owner to disclose their emissions data to the insurers under the Poseidon Principle for marine insurance. Maybe Michael, you can take this one.
It's probably a question better for the insurers, but I think we well, no, I'll answer the question, because I think what's important here is that we don't finance a ship that's insured. We work together as insurers and financiers to enable shipping as an industry to move global trade. And in the end, and this is why transparency is important, is a ship is only a ship, earns money if it's carrying cargo. And the transparency is about the data really to do with the cargo rather than the ship. And that is really what the challenge is for us to lend and to ensure those ships that are continuing to improve their environmental footprint. And I think it's a key point that we talk about decarbonisation, and often, the mind goes straight to zero. This isn't about zero. We know that retrofitting ships is going to be where most of the capital expenditure goes between now and 2050. And so it is very important that we as lenders, and I'm sure the insurers would say the same, as we encourage our clients to take all the steps they can today with the existing fleet to adopt all the technology that's available to them to reduce emissions. And the reason why transparency is important is that reduction in emissions that helps us as lenders and helps the insurers to know where we can do our business in the right way because of the commitments we've all made as institutions. Patrizia referred to the Net Zero Insurance Alliance. We also have the Net Zero Banking Alliance, both part of the Global Financial Alliance for Net Zero. We've made commitments as institutions around our own portfolios, and we need to have the data, and we're fortunate in this industry to have that data to show that what we are doing is helping the industry take all the right steps, not just for investing in the new technology when it becomes available, but investing in all the existing technologies that help reduce emissions today.
So thank you, Michael. I'm just be sharing this question maybe to Patrizia. So what is the benefit for a ship owner to disclose their emission data to insurers under this framework?
I think this is a very good question, the way it is really posed. We are talking here about benefits. Normally, the Poseidon Principles are seen in some way as a punishing measure. This is not the case. It's only in the moment where we have full transparency, we know where we stand, that we can see how we can help to de-risk. Because the insurance industry will not be able to prove its relevance if we do not play a fundamental part in this de-risking. And as such, in the moment where we know where a shipping company stands, we know what the journey is, we can see how we can support.
Again, maybe I can just sort of chip in as well, if I may. I mean, I think the question was, what's the advantage of disclosing the emission data? Well, I think for those owners who are willing to disclose the emissions data, then they are increasingly going to find that they won't be able to get finance. There's a very important distinction here. There's a distinction between not giving the data and giving data which isn't particularly favourable, at least at the outset. So if an owner won't disclose the data, they probably won't get finance. If an owner discloses data which is not particularly favourable, but is willing to take the necessary steps to improve the performance, then in likelihood, they will get finance. Because this is a journey, and I think as Michael sort of mentioned, we're not going to get to zero overnight. This is a long pathway. So really, the advantage is very simple. They either want finance or they don't. And in a way, the score is less relevant. It's about the intention.
Stephen, I fully agree with you. What we do not want to create the perception that we are in some way withdrawing from clients that are performing less well. And your statement as such, it's really key. It's not about where you stand, but that you are ready to share this with us so that we can see how we can work together.
Yeah, we want to work together with the owners to improve the performance. And if we don't have transparency, then we can't do that.
Thank you. Maybe a question for Rolf Storr this time. So you speak a bit about the score. We understand that it's not the most important here, but there is a question around this. So with the disclosure, there is likely to be an expectation that the score will get better year on year. So is that so in your opinion? And if yes, how do insurers make sure to meet these expectations?
Well, I guess I partly said it in the introduction that I don't think necessarily will get better year by year, but it will get better long term. I think that long-term trend is very important for every insurance company to monitor and follow, because in the marine insurance industry, the longevity of the client relationships are very long. Relatively few companies are changing their insurance providers year by year. And if we are not following it and not make sure that we have a relatively modern fleet, a relatively well-performing fleet compared to the market, then we will in the long term lose out. So it's important to monitor the development and make sure that we have a fleet which is fit for the future. So this is a long-term game. It will not improve every year, but if it not improve over a few years, then we will certainly have to consider what to do.
Thank you. I have another question for the financial institutions. So Michael and of course Marco or Stephen, you can also share. And so are the banks are planning to include ship emissions data requirements to loan covenants?
Let me kick off and then hand to Stephen and Marco. One of the key principles, if you like, around what we have done here is not to collaborate in any anti-competitive behavior, i.e. the individual business decisions remain with each signatory. The only covenant, if you like, that all the banks should have had or have is in being able to ask for the data. That's a fairly standard covenant in a loan agreement, that you're entitled to ask for reasonable information in not just making the decision, but also monitoring the performance of the loan. In terms of any other covenants around emissions or anything else, that is entirely up to the individual institution in reaching their business decision. One of the things I would say before handing it to Stephen is that when we launched, we sort of created a mini industry on the owner side of enlightened owners looking to manage their fleet in line with the Poseidon Principles, so that they were able, in fact, to offer to lenders suggestions around benefiting from how they manage their emissions. And we've seen that, and that will, I think, only increase as the data gets more and more established. We'll see that in the loan market and the bond market, that this data will be used, which will then have some benefit, obviously, in either pricing or covenants. But this is about transparency around data, not about how we individually do business. Stephen. You're on mute.
I knew I would get caught out sooner or later. Thank you. Look, the intention isn't to make this prescriptive, with the exception of providing the data. As I mentioned before, this is a more sort of an exercise, if you like, about intention to decarbonise and encouraging ship owners to move along the right path. Now, the only exception to that I would mention is that we and a number of the other banks have done what we call sustainability-linked loans, or sustainability improvement loans, as they're sometimes referred to. And in those cases, then there are covenants around the emissions. It's not an event of default, but if they meet emissions targets, they do get a small reduction in the margin. If they don't meet the targets, they get a small increase in the margin. So it's kind of a carrot and stick, but that's the only kind of covenant which we have. And I stress that not meeting the target is not an event of default. It's merely an increase in the margin or a decrease if you do meet the target.
Yeah, maybe to add from my side, I fully agree what Michael and Stephen said. And also for us, we don't have any additional specific covenants when we speak to our clients. But as the Poseidon Principles became sort of integrated part in our ship finance process, also decision process, of course, it is very important that we have the full transparency and that we get all the relevant data. Actually, what we do in an early phase when we start talking about potential new business is that we apply a so-called, Poseidon Principle test on whether the project would improve our own current Poseidon Principles portfolio score. So if it does not apply or does not improve our alignments, then we would not take it forward. But that, as said, is not managed by through governance, but actually within a dialogue and testing the principles.
Thank you very much. Maybe a question now for the insurance side. So maybe Patricia and then same Rostor or Ben if you want to comment, but is there any pushback from the non-enlightened owners when it comes to data transparency, according to you?
Can you repeat the question?
Yes.
What did you say about owners?
Yeah, is there any pushback from the non-enlightened owners when it comes to data transparency?
Yeah, I can just give a short answer from our experience in GARD, and certainly yes, for some which felt unfamiliar with the initiative at the first contact point from our underwriters to the members, we experienced some pushback. But I think our underwriters did a very good job in the process. They had good support from our team working on the PPMI, and they were able to explain to the members in a good way why it makes sense to report. So we ended up by convincing quite a good number of those which first were actually slightly reluctant to report. So that I would say overall it was a good experience to have that process with our clients.
Yeah, thank you, Rolf. I had just trouble in understanding the word non-enlightened owners. I can fully share what Rolf said. I have to say that in general, this discussion was always very positive. There were very clearly ship owners that were quite reluctant, but it was always the start of a very good dialogue.
Thank you very much. So it's all about also raising awareness on the initiative and having this conversation that can help.
Morgan, can I suggest that we go to this question on the challenge of collecting vessel data? What about estimating carbon emission?
Let's go.
Yeah, I think this is a very important question. The question is regarding the challenge of collecting vessel data. What's about estimating carbon emission with innovative technology tools such as the tricky thing is the word estimation. We are fully aware that there are very professional partners out there that are providing such estimation. Unfortunately, they are estimation. And as such, it would be really difficult to be able to compare then one estimation to the other. Even if IMO would not be the best possible possible calculation, what has been provided now, it ensures consistency. It means that the result among the different parties can be easily compared. While if you are using estimation, there will be differences that are coming from the estimation methodology. Thank you for asking this question, because I have heard this, I cannot even remember how many times.
Thank you very much. I think it's time to go to the conclusion. We had most of the question. And of course, you can also are welcome to contact our secretariat and we will be happy to answer. So maybe if we can have a final word from Michael and Patricia, just to finish this session. And if you have a final word to share with the audience.
One of the things this industry has not been good at is recognizing how important it has been in changing the face of the world, in taking millions out of poverty, and in helping the fantastic growth of global trade, helped, of course, by organizations being created like the WTO, China joining the WTO. This industry has a huge responsibility, but also now a huge opportunity to reflect on the importance it brings to society in a way in which the common goal of managing the environmental impact of everything we do, this industry has a key role to play. The great thing that it was, in my view, accelerated through COVID was the creation of a very collaborative spirit in this industry, which we never really saw before. And that means using information to make sure we don't build unnecessary ships, that we don't have ships that are sailing around the world looking for cargoes and leading to banks lending against them and wasting capital. So we have this collective effort, which is leading to a fundamental change in this industry. And that is very difficult when you're in the industry to see it, particularly a conservative industry that often resists change. But as Stephen pointed out earlier, this is about access to capital. It's about access to cargo. It's about this industry having to justify why investors should invest in it, lenders should lend to it. And one of the tests now, not just around insurance risk or credit risk, is what does this industry do to the environment? And we know that the data, as it becomes more and more public, will influence how supply chains are organized. We're going to see major companies that use maritime supply chains looking at that environmental footprint. And as we've seen from other initiatives, which in a way we helped create in an intellectual sense, the COSAV Alliance, the Sea Cargo Charter, we have cargo looking at this. And what's very important is that we measure progress together, we incentivize the reduction in emissions, and we help speed up the investment needed with the energy industry in that transition to the zero emission fuels and zero emission ships. And we are a small part of that by our transparency and by helping our clients make the right decisions.
Thank you, Michael. Patrizia?
I keep repeating the word milestone. What an important milestone this report is for us as a insurance industry. Now we know where we stand and we know where we are heading. The results are not surprisingly. There were reports in the press about insurance company not meeting the climate goal. These results are simply a mirror of our industry. The purpose of this exercise is to establish transparency, to be able to go along with our client in this journey, because we need to create the right incentive, because the decarbonization, the cost for the decarbonization will be paid by shipping company. We need to create the right incentive for them to decarbonize, and especially we need to support them in the moment where we will de-risk this transition.
Thank you very much for all your great contributions, and I guess it's the end of the webinar, and we thank you all the speakers and attendees today, and if you have any questions, please do so.
Thank you very much.
Rest of the day.
Bye.
Thank you. Ciao.
Bye.
Thank you, everyone.